We borrow from our whole life insurance policy to purchase an asset. My name is Darius.
And I'm Carmen. Welcome to the Wealth Nation channel, where financial freedom isn't just a dream, it's a reality. Now, in this video, we are going to share with you the simple strategies you can use to leverage simple interest to create cash flow.
Right. Now, the important thing to understand is we're borrowing from our whole life insurance policy because of the simplicity of simple interest. That's probably why they call it simple interest. Because it's simple. And the nice thing about it is we borrowed $28,746 from our whole life insurance policy to purchase a mobile home note. Now, the benefit of this mobile home note is that we were able to charge an amortized interest rate. So we are borrowing at simple interest, which is at 5%, and we are purchasing an asset at 12% amortized over 90 months. Mm-hmm. So the nice thing about our whole life insurance policy is there's no nobody calling us telling us when we need to pay the loan back. So the $28,746 that we borrowed, we're earning $489 every single month from our mobile home.
Now, let's take a step back real quick, shall we? What we want to make sure that you all understand is what we talk about on the Wealth Nation channel is how to leverage whole life insurance to create cash flow or to invest, right? We're not using whole life insurance as an investment. We're utilizing the cash growth inside of a whole life insurance policy to then invest. So what we're literally doing is using OPM, other people's money, in this case, the insurance company's money, to make investments. Mm-hmm. And the reason why we feel that this is a really amazing play is because we get to have many different benefits and features that are previewed to us by just having a whole life insurance policy. So as opposed to like leveraging money from our savings account, a whole life insurance policy provides us with a death benefit, and it allows us to have liquid capital available like a savings account would. But the death benefit is a huge perk to us. So we are able to do a few different things inside just having a whole life insurance policy, which is why we find this favorable. Now, everyone does things differently. This is why we are the Wealth Nation channel and we specifically talk about whole life insurance. But the fact of the matter is when you pay your premium every single year, there will be cash that is available to you. And it depends on how your policy is designed, but there should be cash available to you that you can use at your discretion.
Right. Now, to that point, this is what we did. We didn't withdraw those funds. We borrowed those funds. So as we borrowed those funds, we have to pay the insurance company back because it's not our money. So they're charging us 5% simple interest. One of the benefits of simple interest is the fact that it's easy to calculate. So if we take the $28,746.87, multiply it times 5%, we get $1,437.34. This is what I have to pay. But I'm not going to pay it because I use those funds to purchase an asset at 12% amortized interest rate. So I am earning $487 every single month, which includes principal and interest. So for the first year, I earned $5,851 from those payments. I then take those funds and I pay back my loan. What that allows me to do is it reduces the amount of money that I have outstanding with the insurance company. So it reduces my interest payment every single month. That money is being paid back to the insurance company.
And what you also didn't say that is happening is that we've basically outsourced the loan repayments. And what I mean by that is by us having an asset in this mobile home, we are seller financing it. So the soon to be new owner, right, is paying us the monthly payments back. And those monthly payments are what we are using to pay back to the insurance company. Hence, we are outsourcing those payments. We're not paying them back out of our bank account. It's coming directly back from the tenant.
Right. So in that very first year, when we purchased this mobile home, this was back in 2021. And just in interest alone, we earned $3,363.23.
That's a big deal.
That is a big deal.
Just for moving money. Like when you think about it, we don't have to overcomplicate this process. We literally said, hey, we have about $28,000 of cash value in this whole life insurance policy. Here's an investment. We move money from here to there. And then what happens? The money comes back from here to there, back to the insurance company. You see how I did that? And what did we have to do? Move the money.
That's it.
That's all we had to do. And these days we're not even moving the money. The computers are doing it. right? So we're just sitting back watching this whole thing transpire and allowing us to create cash flow in our system. If you find this information valuable, then definitely click on the link below so that you can gain access to our 6-course series where we show you how we bought a home in the Dominican Republic, how we buy mobile homes, how we buy cars, and how we pay off debt using whole life insurance, just to name a few.
Right. So again, second benefit to simple interest is the fact that you pay less in interest.
Yeah.
Because here's the thing with the insurance companies, every time that $487 payment goes back to the insurance company, they reduce our outstanding loan balance, which means we pay less in interest. And what that looks like when you pay the money back to the insurance company is every payment that you make, they'll show you that your account is credited by the difference of the outstanding loan.
Now, with this whole process, again, the thing to note is, what were you going to do with your money anyway? A lot of us like to just see the money sitting in our bank account, not doing much of anything. And what we recognize even more with COVID is that inflation is going to take over, or it has taken over if you haven't noticed. So with this process, we recognize that if we have money just sitting in our whole life insurance policy and we have opportunities to fund our lifestyle needs, why not just take advantage of this process and not overcomplicate the system like we said before? So hopefully this is an amazing example of you being able to see how we just take money sitting and turn it from being a liability into an asset with just the simple investment that we made.
Right, because a third benefit to simple interest is the fact that you're not being charged interest on interest.
Yeah, compound.
Mm-hmm. We're not paying compound. What we're doing is we're charging compound interest. Mm-hmm. Because year to date with this specific mobile home, with this one mobile home, we've earned $10,301.99 just in interest. Just in interest, compared to the simple interest that we have been charged by the insurance company.
Totally, yeah.
So this is very beneficial to the people that are borrowing the money, which in our case is us. So that difference that we're able to earn with the mobile home, we're able to put back into our system so that we can buy additional assets. Mm-hmm. Now, all this work is being done outside of our life insurance policy. The life insurance policy is doing its thing on its own while we're using the funds to make more money, to purchase assets, to invest in assets.
Mm-hmm. Now, there is one stipulation that some of our advanced viewers might be asking. If we are being charged 5%, but we're earning 12%, where is the difference in the interest going? So that's why we always say we're paying ourselves back, or we're paying our system back. We are stuffing as much of the money that we possibly can back into the insurance policy to what we consider the MEC limit, the Modified Endowment Contract, MEC. And what that means is every year the insurance company is only going to allow you to put in so much additional funds on top of your premium and your loan repayments. So we know what that window is for all of our policies. And what we do is every year we call the insurance company and say, hey, what is our limit? How much can we add in additional to our policy? And that's how we're able to understand how much more money we can add into the policy to get up to our MEC limit. And that's where the policy really starts to grow and take off, because we are adding more money into the policy, which allows us to continue to earn the guaranteed compounded interest rate.
Right. Now, here's the kicker that I want everybody to understand. What Carmen is referencing and what she's saying is the fact that we're paying the money. Are we actually paying the money, or is the money coming from our investment?
Yeah.
That's the thing that we want all of our clients to understand, is that when it comes to additional payments going into your whole life insurance policy, have your investments make those additional payments into your policy on your behalf. Because the only thing we are representing are middlemen. Mm-hmm. We're representing middlemen. We borrow from the insurance company their money, and then we use their money to purchase our mobile home. Mm-hmm. The mobile home payments are coming in the first of every month, unless it falls on a weekend. It'll be that following Monday, $487.59. We're then sending that payment back to the insurance company to reduce the outstanding balance we had so that we can pay it off a lot sooner. By doing this, we are no longer in debt to the insurance company for the simple interest, even though it's great. We're not in debt to them. And we get to take the additional interest to put in additional cash value so that we can have even more money available to purchase additional assets. Wealth Nation, would you like to know the details of how we use our whole life insurance policies to purchase additional assets?
So click on the link below so you can access our free training and our 6-course series where we teach you exactly how we use whole life insurance policies to fund assets. Now let's get back to the video. Now, Wealth Nation, this doesn't have to be complicated. This is just one example on how we have used whole life insurance policies to create assets, to create cash flow, to invest. We're sharing this video specifically for all of you out there that say, hey, Darius and Carmen, I don't have debt. What do I use my whole life insurance policy for? And the idea is you are the business. Think about all of your expenses. It doesn't have to be just debt. What are you spending money on? Or what can you potentially invest in? Being able to utilize the cash that's inside of your whole life insurance policy will change the game once you start understanding how to play the OPM game, other people's money. And when you're able to use other people's money and keep your money liquid, it just allows you to have so much more options available to you when investments knock on your door.
Right, and absolutely paying the interest game. Borrowing money at simple interest is huge. Here's some of the benefits. Is the fact that it's easy to calculate. You pay less interest. You no interest on interest. You don't have to worry about the compounding. It's beneficial for the people borrowing, which in this case is you, and you save interest by paying off early.
If that sounds sweet with you, Wealth Nation, then go ahead and check out our next video where we continue to share all of the things that we're doing with whole life insurance.
Remember to own your own lifestyle,
or someone else will. Did you know that you can use whole life insurance to buy assets?
I don't like it. Are you aware that you can borrow from your whole life insurance policy to purchase assets?